Thank you, Dr. Sholarin. I'll try and recap a little bit of what both speakers said. The gentleman on my right said the Islamic system is based on an interest-free economy. Currencies are backed by gold and silver. Therefore, governments are not free to print money at their will and whim. And we're free, it's freed from this obsession with growth. Those are, I think, the main points. There were several others. Now, Dr. Sholarin on my left says that interest is necessary because of the importance of credit creation, which is crucial to allow economic growth. Now, okay, now we've got a no growth and a growth argument as well. He said also that banks they play an important role as intermediaries because it's a bit too messy if we all try as individuals to lend money to each other, because it's not going to get to the people who need it most. And he defended the ability of governments to print money. He says it has benefits and flaws. The main benefit is that it can be used by governments to correct fluctuations in their economies, for example, to stave off unemployment. And he summed up by saying capitalism is flawed, but it's pretty much the best thing we have, so we shouldn't throw it away. Now, the next part of this evening's session is supposed to be each of the two speakers addressing questions to the other. Now, it's going to be a bit tricky with only one mic between us, but we can try and manage that. So, over to you first, Mr. Harwood.
Just a quick comment. Dr. Ola mentioned credit creation, and he said that at an organic rate as opposed to a high growth rate. What's wrong with an organic rate? What's wrong with actually letting things grow at their own pace? Why do we have to always seek for the high growth rate? What that led to has led to a uncontrolled greed from particularly the banking sector, where they wouldn't accept a 3 or a 5 or a 6% return on their capital. Had to be 15%, 20%, 25%. And that led into more and more growth in credit, and more gambling with that cheap money which they had, and more losses. And he mentioned the TARP program. The TARP program is an appalling program. This is originally $750 billion US bailout by the American government. Do you know what TARP means? It means Troubled Asset Relief Program. I'll give you a very simple analogy. If your neighbor goes down to the local bookmaker and puts £100 on Lucky Man in the 5 p.m. race at Haydock, because he's absolutely certain it's going to win the race, because it's going to increase his return, and it actually fails, he's left holding a ticket stub which is pretty worthless. That's what happened in 2008. The major banks in the US and across Europe was there with troubled assets. What is a troubled asset? A troubled asset is a virtually worthless derivative. So the governments went to them and said, give us all that junk and we will give you some money. We'll give you a second chance. And the second chance of those banks was to actually go in and strangle the patient, because they're not out there lending to business. Dr. Ola made a very correct and clear and appropriate presentation of the working of capital markets. You know, you need a loan, you go to the bank gives it. You have capital, you give it to the bank is the intermediary. But that is broken down. It's broken down today because the banks are lending money from the governments at virtually 0.5%, 0.25%, and so on. And they're lending it to businesses at 8 and 10%, and 20% for overdrafts. That's an appalling abuse of that position. And they're not lending now because their balance sheets are so badly structured because they have been gambling in the pursuit of high growth strategies. As a result of that, they are needing the bailouts. So this is poor. Now, he did correctly say to me, and I'll just respond to it, that we need some growth. And how are we going to get if we don't have a banking system as an intermediary? And yes, it is messy if you have to deal without a bank. I'm not saying that everything a bank does is wrong. The intermediary aspect between borrowers and lenders, or what I would call the equity side of the banking market, is good. Because you either have capital markets which are providing money based on interest-based debt, like bonds and so on, bonds and loans. Or you can have equity markets, and this is what Islam encourages. It says that you go into these markets and you're sharing risks and rewards as an equity participant in a company. Small, medium, large companies, sharing of risks and rewards between investors and those that use that money. And there's a whole wealth of variety of different company structures that Islam puts forward. And yes, there can be a bank or there can be an advisor there in between, bringing those people who have capital and those that need capital, bringing them together. But the key issue is this, is that that intermediary takes a fee for that work. That intermediary doesn't become the whole conduit that decides the flow of money that goes in or out, which is what we have now in the banking system. The reason we have these busts and booms is because the banking system periodically is going to squeeze your neck and repossess your business, repossess your car, repossess your home, or actually go to the government and say, this student didn't pay back the loan, you take it out of his PAYE tax. That's how powerful the banks are. Whereas Islam says, no, the bank should not have that power. If you go into a business relationship based on equity, you share in the risks and rewards. Some businesses are successful and you're going to get good dividend payout. Some businesses are going to fail and you're going to lose your money. That's the nature of business. And that's the way it should be functioning, rather than this over-reliance on debt capital markets.
Again, I want to thank Dr. Harwood. I will summarize his points into 4 categories. The first one, he talked about organic growth versus accelerated growth. Next one, he talked about quantitative easing, TARP, and the rest. He talked about the banking system that is breaking down. Then he talked about people's homes and properties being repossessed if they fail to meet up with their obligations. I will take the first one, organic growth versus accelerated growth. Organic growth means you are going at your natural pace. You are going at the rate at which you are endowed. If you do not have enough money, you have to live within your means, regardless of opportunities that are flying around you. Why can't you? And what is wrong in you taking advantage of those opportunities? You do not have the money, but you can see that people are in need of this, and there is an opportunity to buy it at a price and sell it for profit. But the problem is you are short of cash. You do not have the money. Then why can't you go to the bank and borrow and then pay back the interest on that? And that will then help you to increase your return, to increase your earning. And then if you look at it at aggregate level, it can push up an economy to grow at an accelerated level. If you have been denied access to credit, you will have missed the opportunity. You people who have been here studying today, because can you afford to find how much? 6,000 for a year? 3,000? 9,000 now? I don't know. If you cannot, then go home and wait until you are in a position to raise that money, and then you can come back here. But you should have finished, and you should have started working if that had been made available to you. But if you were denied all those, you wouldn't be able to move on. So you will have been curtailed, and the rate of development will have been slowed down. And we have seen countries like North Korea, Cuba, and the former Soviet Union, where they were doing all those sort of things. We see where they are today. They are far, far, far behind us. But we are able to leverage our way out. We are able to have access to extra funding to boost ourselves and achieve greater heights. We are able to finance projects of multi-billion dollars, even though we do not have the money. Yes, but what's wrong? if we do not have the money, and then someone in China has the money, then I can borrow it, use it, achieve the result, and return the money. The alternative is to grow at my own pace and miss the opportunity. The second issue that my colleague raised there has to do with TAB, quantitative easing. Yes, if you remember, we had the subprime mortgage crisis, which was badly managed, and it started from America. As a result of that, there were write-downs, and banks lost huge amount of money because obligors were not able to pay back their mortgages. And that depleted the capital base of those bankers. Well, my question, if you were the president of a country, would you allow those banks to sink? And what would be the consequence in the job market? Thousands of people will be laid off, and you will come back and pick up the pieces because you have to provide income for those who are jobless. So what is wrong in stepping in temporarily and then correct the anomalies, and then they can then pay you back your money? There's nothing wrong in that. It's like having a backup plan. Yes, you haven't got money, you go to your dad, can I have 50 pounds? Okay, make sure you pay it back. And here you are. Then you go and sort yourself out, then you come back, and then you return the money. But if your dad or the lender of last resort has chosen not to give you that money, you will have missed an important opportunity. An example is your education, which you are enjoying now. The third issue is banking system that is breaking down. It is breaking down. I agree with him, without any doubt. It is breaking down. And it is flawed. But please, let us appreciate how our world would have been if there were no banks. Yeah, will you be able to lend your money to your own brother? He might not. But here we have bankers standing in the middle as intermediaries. Not only that, they offer financial consultancies. They give you advices. They have the capacity. They have some of the best minds in the world pulled together to advise you to make sure that things work properly. And for that, they get compensated. Occasionally, they then start to trade with their own money, which they're not supposed to do. And that brings about what we call, well, moral hazard. And government is now stepping in to stop that. And we have Volcker rule. We have Basel III, and we have other regulations in place to make sure that those excessives are minimized. I agree, those things are wrong, but just imagine how our society would have been if there were no banks around to stand between us and our counterparties. Things would have been very, very messy. Lastly, my colleague here raises the issue of people's property being repossessed if they cannot meet up their obligations. Yes, I agree, it has to be like that. It has to be like that. If you borrow money, you are using somebody else's resources. And that person is being denied the opportunity to enjoy that resources for a while. So it's giving it to you, and that person must be compensated. The compensation you will get depends on how long you have his money for. You have his money for 1 day, you pay him for a day. You have his money for 20 years, you pay him for 20 years. There's nothing wrong in that. And if you come to see the system of capitalism, we have pool of funds available everywhere. Let's take insurance policy. Every month you pay for your credit card, you pay for your insurance, I pay for my mortgage, doctor pays for his credit card. Money is being pulled from right and left. The money must be invested somewhere. So they have to be lent on to somebody. And return must be earned. Otherwise there will be no opportunity to fund our pension, to fund our education, and for government to embark on projects. Whoever borrows money is an obligor. He or she has entered into an obligation to pay back the principal and to pay back the interest. If they fail to pay, they must be penalized, and then they must be made to pay appropriate return on the money they are borrowing. That is the only way it can be sensible for ordinary people to keep their money in the bank or to invest their money in such a project. They must get adequate return, and the return must not be less than what they are going to forgo. That is the opportunity cost of that one. It has to be factored in as well. Thank you.
Thank you, Dr. Sholarin. We've now come to the part where we invite questions from the floor. Now, obviously, I want the questions to be on topic. The topic is economics and finance, and those are the only questions that will be accepted. Your hand was at the first gentleman in the fourth row of the classes.
Thank you, three of you, well, both of you for...
Sorry, you need to speak louder.
Stand up. Yeah. Sorry. So yeah, thank you both professors for actually speaking. I thoroughly enjoyed it. However, Doc, I've got a question for both of you. Can I? It's a short question.
I guess we can take that.
Okay.
Is it one question for both of them, or is it a question each?
No, two separate questions actually. But it's
well, let's hear what you've got.
Okay, so first question, Dr. Sholarin. Okay, I felt that you painted a very rosy-eyed picture of the current banking system. You didn't touch on fractional reserve, okay, because what you did touch on, you basically said money savers or the savers put their money to the banks and then the surplus funds get actually lent out. However, that's definitely not the way banking works, especially modern banking since 1971, most definitely. Because what happens is the banks are legally allowed to give us money that they don't actually have. So what that means, we create wealth for them as soon as we put our signature on the dotted line, signing away our contract, signing for that £6,000 loan for a car, or whatever other reason. So I don't agree with your particular model that you actually painted. So therefore, I was wondering, from an ethical point of view, when the banking system is just like that, the fractional reserve system, which I believe is set at around 4%, the fractional reserve system is in relation to how much assets or how much money the banks have within their deposits right now, and how much money in relation to that they can actually lend out. Okay, if that's a little bit clear. Okay, so I would like a comment on that. And second, you did mention about...
You had two questions to Dr. Sholarin.
No, so that would, well, this is in relation to that.
Right.
But the issue, you painted a really poor picture of people not willing to invest in other people's education. There was a time when education was actually free in this country. And in relation to that, okay, education, or the tax on education was actually taxed. Okay, so how would you respond to that? Okay, and with Brother Jamal, thank you very much for your talk once again. However, I didn't hear anything, concrete from you. What would you do in this current situation? As Rothschild said, if you were given the control of this country's money supply, what would you do tonight? Thank you.
Okay. Well, let's take these. Let's take these three questions first. Well, I'm not sure about the second one, because that's more of government policy rather than economics policy. The first question is about the fractional reserve. Do you want to answer that, Ola?
Yeah. On the issue of fractional reserve, where there is paper money and there is real money. And the way it works is that through multiplier effect, banks can multiply the amount of resources they have at their disposal. And this is part of the overall policy of credit creation. You can create credit via paper money, and you can create credit via paper money. In essence, it's not every time you will be able to use paper money, you can use real money. An example of a situation where you can use paper money, that is artificial money, is you want to import something from abroad, and then you are issued with a letter of credit. You understand? And then you only have to present that one to secure possession. And then after that, then you can then pay, through your bank. If that was not available, a lot of things would have gone horribly wrong. So we need that to keep our system going, and it is just part of the system. And we also use that concept very, very heavily when we are trading in forex currency. It is highly leveraged. sector of the financial system. So if you have 1 million, you can trade currency for 1 billion. And then if you make profit, your profit will increase in the same magnitude. However, if you lose, your loss will also increase in the same magnitude. So there is nothing wrong in that. The second issue relates to taxation. Could you just remind me about that again?
Well, the issue was, okay, you mentioned, you basically asked the audience, how do you think you're being funded?
Yeah.
Okay, your education.
Yeah.
Okay, what I'm saying was that, and you referred to the £6,000 a yearly figure for tuition fees. In actual fact, if the banking system wasn't as corrupt as it was, our fees wouldn't be that high. Now, the other issue was, once upon a time, so I'm not a student anymore, funny enough. Okay, but once upon a time, only a few years back, okay, education in this country was free, as it is in Scotland today.
Yes.
So you can actually have education via taxation, which is a very, very credible alternative.
Well, education was free before, perhaps because the demand was in tandem with supply. But in the present situation, we have demand for education outstripping what government could provide for. Population is increasing, and then government has to find a way to discourage people from, I mean, just look at it, you go to your GP because it is free, you take your medication and you just leave it on the shelf, and it expires, and you throw it away. But if you are asked to start paying some token fee, then people will start to think twice before embarking on such wasteful adventures. So education, it's okay to pay for it if the government believes that it will give you value for money. That is what we have to talk about constructively.
How much can I respond back to Dr. Sholarin?
I think you've had your airtime.
Okay, all right.
We can chat later on.
Maybe
I don't
later,
mind.
Dr. Sholarin.
Thank you.
Okay, before I ask Mr. Harwood to come in and answer his question and respond also perhaps to the fractional reserve question, education was free. When I graduated, which was a long time ago, before most of you were born, we were told we were in the top 3% of the country. Now, quite a few years ago, when the Labour Party were in power, they announced this target of 50% of school leavers to go to university and become graduates. Now that's quite a different situation and quite a different funding challenge, isn't it? So, Mr. Harwood, you've got a rather large question. What would you do? It rather reminds me...
It's a good question. I will cover it, but I can't get Ola get away with his final shot about repossession is good and we need to have that. I agree to an extent, but what happened to the banks? The banks didn't get repossessed on. Come on, they made hundreds of billions of losses, and they got bailed out. There's no repossession there. I mean, it was a simple issue. I mean, don't believe this hype saying that the whole banking system would have collapsed, and the economy would have been dead, and the jobs and everything would have been appalled. Because there's something called the main core banking issues, retail banking, all right? Loans, credit cards, current accounts, etc. And then there's the sexy stuff called the investment banking. Actually, you could call it casino banking, right? And that's the side that made these incredible losses. So the government could quite easily have said, we're not going to support the casino side of business, that can go out of business. And we will ring fence the other side of the bank so that your credit account and your current account would not be closed down with it. So that was a complete lie by the government and the major banks for their interests. So they weren't repossessed on. So the notion of repossession is only good if it applies to everybody. Anyway, the point is, and I will also say just about education, because this is a key matter. Education is a policy choice. Do you put your money into Trident? Do you put your money into invading other countries? Do you put your money into bailing out banks, or do you put your money into core activities like education, which will provide an incredible investment boost because an educated population is more enlightened and is going to be more able to develop new products, is going to be more innovative. is going to develop new businesses. So you should be putting your money into education rather than putting your money into invading other countries and putting your money into bailing out banks, casino operations.
What about social capitalism and the Scandinavian system? Let's not group all capitalism together. Jamal, what about the Scandinavian system? That supports some of what you're saying.
Yes, yes, I agree. I'm not saying that there's only one version of capitalism, but I touched on it in my talk, and I said that the problem with a lot of the social welfare system, it is divisive, and it encourages individualism, and it encourages, in many instances, not always, but it does encourages some people who are going to depend on the state when they shouldn't. And you can see that in terms of the ballooning number of claims in America, for example, in terms of the disability benefits and all these types of things. In fact, the government is encouraging it because they want to show increase in employment. So they're encouraging those who are long-term unemployed to go on to long-term disability because it makes their numbers. That's how perverse it's become in America. Anyway, the question for me, and I'll be very brief, was what would I do if I was in charge with money supply? Number one, you've got to have a solid currency. If you're going to have a currency based on fiat, it's an endless piece of string. And without that stability, your businesses won't have the stability. Nobody will have the ability to really invest. And again, you only need to look at countries which have seen high inflation and hyperinflation to see what a disaster that is for business and for everybody. All right? Second thing is zero interest rates is an absolute must. If it's good for the banks, it's got to be good for everybody else. Why protect this parasite industry which is only going to work in its own interests? That's what it's doing. They have been exposed by this financial crisis because now that we are virtually at 0% interest rates, we can see that it is benefiting the banks and nobody else. If it's good for the banks, it should be good for everybody. The corollary of that, of course, is that you have to encourage equity investment. And I don't have a problem with banks or others being investment advisors and bringing borrowers and lenders together, but you have to have a fair agreement between people based upon sharing of risks and rewards. That's where when the business fails, the capital contributor is also going to fail. But the banks have it geared towards them. In the good times, they charge high interest. In the bad times, they repossess properties. And in the really bad times, they get bailed out. What type of business is that? What type of model is that?